The earnings per share seem to be basically in line with what Wall Street was looking for in the second quarter. I think that you're seeing a little bit of weakness initially in the stock, in part because of the revenue number. But what is interesting to look at with these Netflix results is the company is now basically saying we have more than 50 million members. They have a forecast for the third quarter of basically having upwards of, basically more than 50 million paid members, total members in the third quarter forecast closing in on 54 million. So basically this is the first quarter for Netflix with a subscriber base beyond 50 million in the streaming business. It looks like the international additions that they had during the period. Obviously they've got a growing presence in Latin America and Europe. Go ahead, Trish. Yeah, go ahead.
Yeah, I'm just looking at Netflix's third quarter EPS at 89 cents. This is versus estimates of $1.01. So, yeah. Considerably lower. John.
It is, and they have been spending a lot to roll out in other parts of the world. Remember, Trish, they had already talked about the fact that they would be rolling out in, I believe, another half dozen European nations over the course of the year, including France and Germany. Doing that is not cheap, and there has been the concern about international profitability. Of course, once you're set up and you're in a position to actually start signing people up, then the profitability can come. So clearly, you look at the whipsaw stock reaction, people are trying to make sense of this. I think one thing that's interesting, just looking at the contribution coming from their Latin American business, looks like despite all the World Cup excitement, that was a bright spot for Netflix. There's been a lot of discussion about people buying smart TVs. A lot of those smart TVs give you the option to sign up for Netflix, so that's been encouraging for them. They're also talking about Orange is the New Black being a key driver, actually, of the signups. It's almost as if that show is a bigger driver of signups than House of Cards. So we'll keep diving through these.
Moments ago, we got the Netflix numbers out. It looks like their third quarter EPS coming in around 89 cents versus estimates of 101. So what is this really going to be about? Is this about expansion and what it's going to cost them?
Well, it's definitely about cost. Let's think about what the costs are for Netflix business, right? A lot of investors, for whatever reason, like to pay attention to the number of subscribers they have and their ability to add that. But if you think about that, that's just a function of how much money you spend in marketing, right? You can have whatever subscriber number you want if you want to spend a lot of money on marketing. But profits and free cash flow, and really free cash flow at the end of the day, is what it's all about. So they've been dancing on the edge of the cliff, trying to put up whatever results they're going to put up while they spend fortunes on marketing to grow the size of their user base. That seems to be Wall Street cared about. But the sort of quiet risk of Netflix has always been what are they going to have to pay to get content, and how much content can they afford to have as the world's becoming more and more competitive with things like Hulu, Amazon Prime, and you name it, competing with them. Well, a number that they don't put on their balance sheet is how much they've committed to pay for content in the future. It's a number they know, right? They go into Hollywood. John Erlichman knows as well. They meet with Hollywood executives. They sign long-term deals, whether it's with Kevin Spacey or with Disney, to provide content over a long period of time. They hide that number off balance sheet. They say their accountants make them do that because they don't know the name of the title, or what if it changes, what if, the Snow White Princess #2 becomes Snow White Princess 2.
They found
for that reason
to hide it, basically.
They don't recognize this content cost. But that content cost off balance sheet, if you dig through the numbers here, has gone year over year from $6.4 billion to $7.7 billion. So even as they restrict the number of the pieces of content they have put out there, their expense going forward is going to be a lot higher than ever before, and I think that's a great concern going forward.
I think another concern, I want to ask you, Cory, and John, and Trish, what you think about the fact that they're getting into the international markets, and they say they're making progress there, but it's really slow going. And in the meantime, everybody in Germany or France or Spain is figuring out another way to watch Orange is the New Black, another way to watch some of the other movies that Netflix tries to have its hold on, or HBO or whatever. And there's so many other competitors, whether black market or legit, that they're losing out to in the meantime.
Absolutely legitimate concern. They were first movers in a lot of ways here in the U.S. and signed a lot of important content deals. They've quietly restricted, or they've lost a lot of content deals, and they've added some as well. But you can't go on Netflix and find any movie under the sun, which you could do when they were delivering DVDs. And that's not the case anymore. But a lot of other competitors and nascent competitors in Europe in particular saw the opportunity that Netflix demonstrated, and they're facing more competition there that they didn't see in the U.S.